Good morning, everybody.
Good morning
to our friends across the pond. How many of you were here for the Ticker Highlight Show yesterday? I know you were, Andrew. Andrew was. Who else was here for the Ticker Highlight Show yesterday?
IBM.
All right.
What's going on with
I
our
am
market
closing the puts from yesterday at $7. This is a good spot to take some money. So, if you are following our Ticker Highlight Show trades, you just bagged another winner. Congratulations. Way to go. Did you guys do that? Let me know if you did that IBM trade, because that was just a work of art by one Leisha J. Leslie. All right. If you just did one contract, you're sitting on $325. That's not terrible. Really nice trade. And we continue to produce pretty nice trades here. So if you're not attending the Ticker Highlight Show, what are you doing? All right. So the news is out on CPI. Today, we're here to talk the effects of economic reports, what they mean, and what they're about. If this is your first time at the Ticker Highlight, at the State of the Market, every morning we meet and give you powerful information that we want to see you making. We want to see you crushing. And, you know, folks, we've got Delta Strike, another big winner in Etsy. Put that close out. That's going to be a 100% win. Can't complain about that. Things continue to be fun. And I'm looking at Alpha AI, and I've got a pretty good feeling I'm getting a trade today. So be ready for that as well. So let's talk CPI. And the number that came out today. To talk with me, I am joined by our own Viking of Volatility, our master of the VIX. If you are a member of Option Shopper, you're getting some free access to his RIP zone. He is Andrew T. Giovinazzi. Good morning, Andrew. Good to see you. I hope you're doing well today.
I am. I sent you. I put something a little together on CPI. Just grab some. Grab a little stuff on it in your box there. Just, like, what is it? What's the difference? Core is like no food and energy in core. So all the stuff that people use every day, let's not count that in CPI. in the core CPI. Like we need to heat your house, drive, but why put that in anyway? So I just wanted to to give you kind of what
nobody thinks CPI is a perfect number, but it is what we use for measuring inflation.
True.
Now,
8,000 households.
Yeah.
Did everybody know they only ask 8,000 households?
That's a pretty good sample set.
Okay. All right. I mean, I figured they had, I figured it'd be more.
You would think they would be more digital at this point, and there'd be a better way to do it. Would be my thoughts there. But yeah. So what I would what Andrew and I are going to talk about today is we're going to start with kind of CPI and why markets are really happy today about this CPI number. The headline CPI came in 1/10 of a point under expected, and year over year, I believe, came in line. For core, that came in line and in
Mark,
line.
I have the numbers for you. I sent it to you. You can show a screen if you want. The number I sent you the doc with the numbers.
Sure. So
there we go.
Yeah, there is your number.
We're gonna grow this a little bit. I know it's here.
So yeah, you've got the numbers right there. It's 8,000 people, 23,000 retailers, and the number came in pretty much, like I said, in line. So why do markets like it so much? And one of the things I think people get confused about is, when is a good number a good number? When is a bad number a bad number? And what does all of this mean? So, Andrew, let's start with this. What was your take on the CPI numbers that came in terms of why do you think the market liked them so much?
I think the biggest one is year over year, July, 2.7, 2.7. I mean, I know we just fired the last BLS person.
Yes.
But you got if you have a policy and your inflation rate's basically unchanged, I think people were pretty happy and surprised by that, right? Because there's been a lot of the Fed saying inflationary, and everybody pipe in here. What's all the noise you've heard, right? From people saying this is all inflationary, it's going to be inflationary, and at least for now, you're not seeing the numbers.
Yeah, not yet. No, you're not. And so that's actually what I think people like so much about this report. All right, we just got off what's the number one? What's the worst thing that can happen to an economy, folks? It's not a recession and it's not inflation. What is worse than a recession and an inflation?
Oh, I thought
not as bad as a depression, but worse than a recession and worse than having inflation. Not as bad as a depression. That is your hint.
Oh, stagflation. Oh.
Yes, Scavenger has it. Scavenger said stagflation. So did Manny, the Yankee Greek. He's apparently the guy that orders the Euro dog at Yankee Stadium, right. Not the regular.
The Euro dog.
So, yeah, the answer is stagflation. And that has been something we've been worried about. So if we see CPI remaining calm, pulling back, and we see non-farm numbers continue to be kind of soft, what does that open up the market to? What does that open up the market to, everybody?
I'm not allowed to answer.
It opens the market to rate cuts. So let's go to the CME FedWatch tool. This is something I pay very close attention to. The next meeting is in September and is currently pricing in a 94% chance that we get a rate cut.
No way, really?
Yes.
94%.
Now, you go to October, we now have a 62% chance for a second rate cut and an over 98% chance of at least one.
Wow.
And if you go to December, they're now over 50% that we get a third rate cut. So you look at assets like TLT and IEF. This should be.
How are they doing today?
Believe it or not, I'm a little surprised they're down a touch, which is a little surprising given that rate expectations are moving the way they're moving. So IEF, TLT, both down a touch. The big reactor out of this news is the Russell 2000. Why would the Russell 2000 pop like this and look like it's starting to kind of make that secondary breakout? The answer? Russell 2000 is by far the most interest rate sensitive. Why do I like the Russell 2000 so much? One, it's completely underperformed. And two, it's the most rate sensitive. So I think both of those combine to, make this kind of interesting.
Is the Russell at a is it at year highs yet?
No. Year high would be like for IWM would be like 227-ish. And going out 2 years, I mean, you've got a lot of upside. December of 2024, you had the Russell up over 240. And 243. So you've got the Russell not at new highs. Meanwhile, the Qs continue to march higher. SPX, this 6,400 level has been so hard for the S&P to break. And, for it to do it, it'd be nice to see some of the tag-alongs pull it higher and not just, Amazon and Apple and NVIDIA. So it's interesting that we're having a really strong day and NVIDIA and AMD are down.
Well, aren't they getting did anybody see that news that basically Trump wants to charge all those big tech firms an export license fee?
Yeah, they agreed to that. That is going to be a thing.
Well, it's just basically it's a corporate tax. I mean, do you think Trump wants to tax some of these big tech companies a little bit harder?
I think he does.
Could you imagine Apple getting an export license fee? Google. I think the guy's trying to figure out a way to collect some revenue. That's a little, let's just call it creative.
Indeed. So, all right. Well, and that brings us to, speaking of international events. All right. So does everybody kind of get why we're reacting on CPI right now? For CPI, good news is good news. Bad news is bad news. For non-farms, it's a little different, right? We want mediocre news. Too good of news, and that's bad for rates. And next thing you know, we're sad. Too bad of news, and we might be going to a recession. People start to get worried. Markets roll over. We get kind of like a little bit soft, a little bit strong, right in line. We're happy. So we're looking for slow but some job growth, and we're looking for inflation to stay lower. that is kind of what I believe our Goldilocks market is. And, I do want to close on this, and I talked about it yesterday. So yesterday's close was 62.73. The 63.73. The 63.75 at the money straddle was about $40. We're up $37. And we've been up a little more than this. They have been consistently, and when I say they, I mean banks, hedge funds, money managers, the people that really move markets. They've been so intent on trying to create income out of zero DTE that options to play events have gotten to the point of being too inexpensive. And that's something that we've been kind of playing with a little bit here. Speaking of things we're playing with and international events and what's going on out there. I want rare earth. We already know is popping. Look at USAR. It's up $4. Their earnings were good, but really they are going to have so much. They have to produce so much. They're going to be such a key player that them and MP Materials are in a really, really convenient position. Next on our list is lithium. Now, Andrew, my understanding is that you are cooking up a lithium special situation trade around what's happening.
Correct.
And this is off the ideas of Frank. Why don't you kind of give me the elevator pitch on what's happening in the lithium space right now?
Okay, so so just for everybody's Frank is he's our Washington insider, and he keeps track of important trends, important trends from the government point of view when the government decides to get in somewhere, kind of like
USAR.
So what's happened is, and the government already made a deal with MP, which is another rare earth provider, basically guaranteeing production or guaranteeing they're going to buy their production. US Air is now doing a similar thing. And Frank he helped take this company public. And he obviously wants it to do very well. But what's happening is the government saying rare earth, us making these materials is a national priority. We cannot trust the Chinese anymore, or trust that they will export them to us when we want, because they were withholding them. So now so there is this kind of there's like a national security policy around the commodity, or around the rare earths. They're actually not rare. They're a pain to mine. And in the US, there's a lot of regulatory hurdles, which are now clearing out and making a company like US Air viable. It was basically impossible to get EPA approval to produce this stuff, right? So they were good with China producing it, but not here. And it created a huge bottleneck. And that was the opportunity that Frank and his investment team saw a couple of years ago. Now, what Mark was talking about, lithium, what we're cooking up here is the Chinese have tried to, again, they saw lithium as a key element. So they put a lot of money into lithium production, kind of produce at all costs. And they have a lot of unprofitable lithium mines. Again, Chinese create a lot of electric vehicles a year. So they have a huge domestic production base. However, they're starting to take that production offline because they were doing it they were doing it in an environmentally unsustainable way, they're just creating a big mess. So they're taking this production offline. So that means production in the US that has already fairly stiff environmental controls, the value of that lithium is going, those lithium mines, lithium producers are going to go up. So we should see a move back to US lithium producing stocks that I might add, are way, way, way off their all-time highs. So these are stocks, and I had one in Flash 5. We rode it from like 55 to 80. Then we're back down to 62 again. Then the Chinese announced this, and we're back up into the 80s. So I think there's a lot of room in them to run, but that is the thesis there on those.
So let me kind of rephrase that. So the Chinese tried to do to lithium what we're trying to do with steel, right? Make it cheap and dump it so that they could corner the market. Steel is easier to make than mining lithium. So China has never made any money off of lithium. They've been pouring money into these mines. Plus, as Andrew stated, they may not have the exact same environmental standards that we do here in the United States. And so not only are they losing money, but they're losing money on creating environmental disasters that are going to cost them billions of dollars to clean up simultaneously. So I don't care if you're the greediest person on the planet, right? There are people that exist where if they were radiating if they were dropping radiation onto a school for toddlers playing with puppies, if it made money, they would go in and drop all that radiation. All right. Am I right? Am I right? Right. Oh, we'll dig up that lithium. Sir, that's right next to that school for toddlers and puppies and octogenarians. Well, we're going to make money. Dig it up. There are people like that. All right. And there are people that are happy to lose money if they think it's going to make them money long term. And there are people that are extremely environmentally protective, but and don't care about the cost at all. Right? We run the gambit. I'm going to venture to say that the premier of China is more toward the former. If he thought that the lithium mine that was going to make them a lot of money, despite the environmental disaster it created next to the school for puppies, toddlers, and octogenarians, they would do it. But they're getting the worst of both. They're just losing money hand over fist, money they really can't afford. And two, they're creating environmental disasters everywhere they do this.
So you're saying they don't want to create an environmental disaster and lose money at the same time.
Right. Making money, great. Environmental disaster, who cares? Losing money, bad. Environmental disaster, who cares? You're going for that second combo seems to be what's getting them. But that environmental disaster actually gives them cover to close.
Here's an interesting thing from Gordon C. A train journey between Chengdu and Beijing, 20 hours. A third is through rare earth mining areas. A moonscape total disaster. So there we have it.
It was an octogenarian, someone over 100. No, it's over 80. Someone over 100 would be a centenarian, I believe.
So you know what also this sets up, Mark? The CPI number being a little light.
Yeah.
Gordon C's like, I'm over 80.
Well, sorry about that, Gordon. Don't go to the school. Gordon, if you're over 80, do not, and I repeat, do not go to the school for toddlers, puppies, and octogenarians. I worry for you. So the
W.A.
point
Gordon
is,
is just a puppy.
so the point
Also,
is,
that sets up this CPI number. It's setting up a potential special situation as well, because we have a PPI number coming out. And I think volatility has definitely come down a little bit, but I think we could have a 1-2 punch here this week.
yeah, I think
situations.
With the lack of news this week, lack of earnings, and if with CPI coming in light, PPI comes in light as well, you're going to be looking at a VIX that's going to be 14. And these lithium plays, because they're interest rate sensitive. So the timing is perfect, right? Interest rates are coming down. China dialing back production. US investing in production, clearing regulatory hurdles. There are a couple of these lithium stocks that myself, Andrew, and Frank think are going to be huge winners. And Andrew's going to be bringing you that special situation trade later this week. I'm going to be revealing one of these lithium stocks to my friends in Alpha AI here today. We might not buy it today, but I'm going to reveal to you the name. And then, so you've got an opportunity to get involved in lithium twice. You can join special situations for next to nothing. Get a really good look at what Andrew's doing on the lithium side. Andrew and Frank are doing on the lithium side. And maybe you'll get a VIX play in there as well. Or you can join me in Alpha AI as I start boot camp number 2 today. And I get primed for a trade. As I said, I am feeling highly confident our first trade is going to be coming out in the next 4 hours here. So I'm feeling better about things. All right. So if you'd like to join our special situations and check out this launch, you are welcome to. And if you want to join me in Alpha AI, get access to the software that is scanning the market, looking for short squeeze, and get this lithium pick today. You can join Alpha AI. Just click the link or give us a call, 888-872-3301. And if you just want to dip your toe in the water, you can join special situations for, just, less than a cup of coffee at Starbucks nowadays. So click the link and join. I'm in the middle of closing a couple of more special situation trades this morning that are nice wins. So, much like Stay the Market, where we just put out for free, a 87% winner and a 134% winner, our last 2 closed trades. You can join special situations, which has just a really nice track record as well. And you can join for $4. So why wouldn't you want to do that? So click the link and join us. And we look forward to having you guys involved. All right. So click those links. Join us tomorrow for State of the Market again at 10 a.m. Eastern Time every day for more action-packed, knowledge-filled, actionable trade idea generation. And for Andrew Giovinazzi, I'm Mark Sebastian. I am your only option. We'll see you back tomorrow, and have a great rest of your trading day.
Thank you, everybody.